Okay. In this module, we're going to talk about how to use time frames, right? So, when it comes to time frames and finding the trade, right? I do top-down analysis, meaning going from the highest time frame to the lowest time frame, right? Why? Because highest time frame holds higher power. Keep that in your mind. The highest time frame will always hold the highest amount of power in terms of market direction, right? So we're starting out with the weekly and the daily, right? Obviously, weekly is looking super bullish. Daily is looking super bullish as well, right? And like I said, maybe you guys probably hear this in my lives, but we're day traders. What I teach is day trading within the day, meaning I'm in and out within the day. So we're not going to be looking at the daily and the weekly, right? You have to be able to know how to pair the time frames into a line. So for daily bias, since we're day trading within the day, not swinging, we don't necessarily need to look at the daily and weekly. Obviously, you can still use the daily to we have a daily fair value gap right here. It's unfilled. This would be, you can still keep mind of this, right? But it's not like we're going to immediately go to there on the 5-minute chart, right? Doesn't make sense. So what I like to use is the 4-hour and the 1 hour to find where my draw on liquidity is, right? So this is how we're going to use time frames. 1 hour and 4 hour is going to be used for finding your draw on liquidity. Are we going to aim for these lows, right? This is the 4 hour. I'm pretty sure you guys can see it. This is the 4 hour. Or are we going to go back for these highs, right? Obviously, this is all-time high conditions, and all-time highs, typically, we are always very bullish, right? Let's go to the 1 hour. Okay, 1 hour, we have a very significant low, which is this and these relatively equal highs right here, right? So I'm already thinking, okay, these, what am I, Russian? What am I, Mother Russia? Okay, we have to think what's above us, what's below us, right? So this is the 1 hour and this is the 1 hour time frame. We have these lows below us, but we're very far from it, and we have a very bullish bias, right? So guess what? We also see this 1 hour fair value gap, right? See how everything's slowly starting to come together, right? If we can break past this, this is our condition. This is what's holding us down. Until we can fully break this, then we are more confident to go bullish, right? Taking out these highs, right? There is still that slight chance where maybe, we might hold this and start getting lower price action. Does that make sense? Because it should. We learned about fair value gaps. Fair value gaps and liquidity is what moves the markets. If you master those two things, which I'm gonna hammer on you guys, you're goated. You're good. 1 hour, 4 hour. We know what's above us. We know what's below us. Now, let's go to the 15-minute. Is there anything else that we're missing on the 15-minute? This is the most that I use the 1 hour, 4 hour for the main draws, and 15-minute is okay, what could we react from? Right, 15-minute, it's still the same. We have these relatively equal highs. It looks relatively the same. 5-minute is relatively I wouldn't say relatively the same, but okay. When I see this is what I was just thinking. I didn't say it, but whenever I see this on the 15-minute, see how we have this wick right here? To me, it's okay, is there a fair value gap? Are we wicking out a fair value gap? No, but guess what? We're on the 15-minute. Let's check out the 5. Boom, we had one on the 5. Right, so if we are bearish, maybe we could even sweep out this low. Lows, like I said, lows inside of FVGs are very likely to, they're good points of reversal. So just keep this in mind, but you don't want to overload it. I doubt we go all the way down there to get it, but if we do, you want to keep this in mind. We already swept this low, so forget about this low. So the 5-minute. And when you look at the 5-minute too, guess what? You have this low resistance liquidity. So yes, would it make sense for us to come down? Yeah. Maybe we could get a Judas swing and our way back up. But look, we have the small 15-minute. Doesn't really matter. We have this whole 5-minute range that we just inversed, right? And we also put in an order block as well, or multiple order blocks, right? So now from the 5-minute, you can check the 2, 3, and 1, but the way I take entries is the 1 to 5 minutes, right? 5-minute and the 15-minute will kind of be like for scalping draws, like where would I go break even, because you want to go break even and take profits at areas that are good points of reversals, or mechanically where's the next swing high so I can move my break even, right? Because I do IFEGs. But top down analysis, that's how you're going to do it. You're going to start from the 1 hour and the 4 hour, find out what your draws, what's above us, what's below us, what's holding us down, and okay, let's check out the 15-minute. 15-minute, it relatively looks the same, and then so this is what my pre-market looks like. This is what I do before market opens. I get my levels ready. I get an understanding of where we're at, and then now we just let market open rip, right? So it looks like we're hitting this 1 hour. So ideally, you want to always have like the ideal most perfect setup. You want to see some form of shorts and then get longs, but in all-time high conditions, we probably won't even get a good dump. If anything, maybe we'll just retrace to this 5-minute and then get something like this, right? So that's how everything starts slowly plugging into play, right? You want to see what's above us, what's below us, and then yeah. So this is how I'm charting. Or it's not even market open. My bad, I'm tripping. This is 12:02 p.m. This is lunch, right? So we can definitely see on the 5-minute what happens. Okay, we slightly reject from that 1 hour that we tap into again. You can tell we get a 5-minute retracement, right? So if this was your model, sure, you could take it, but it's not my model, right? And look, now we can tell, okay, we inverse the 5-minute. Now I would expect price to at least come get this trend line liquidity. If anything, maybe we could even respect it. So let's see. Would you look at that? What the heck was that from, right? So respect of the 1 hour. So that's how you, I know this wasn't market open, but still, that's how you get an idea of like where are we in the markets, and how can I navigate through this, right? By using the time frames. You always want to think about it. If you're going to take entries on the 1 minute to 5-minute, you're going to want to, for your higher time frame use, you're going to want to use the 15 to the 1 hour and the 4 hour. If you execute on the 5-minute to the 15-minute, you're going to want to use your higher time frame. Like your higher time frame would be considered as the 4 hour and the daily, maybe the weekly, right? And these are for swing traders using, if you're entering on the 1 hour, 4 hour, that means you're swing trading. That means your higher time frame is the daily, the weekly, and the monthly, right? But we're day traders. So the way I like to do it, I execute within the 1 minute to the 5-minute, and my higher time frame is typically the 1 hour and 4 hour. 15-minute is the perfect right in between, I would say. It's right in between the smaller and the higher, right? But it's right in between. Does that make sense? Right? Like you want to be able to pair it like that. So that's how I pair it, because we're day traders. 1 hour, 4 hour is used as knowing, okay, the draws, right? Like I had these draws marked out. I had this low and I had this low, and I bet you, look at this. We're holding this 5-minute fair value gap. We could even potentially reject from this, and we swept this low, right? So it's like, let's see what we can do. I know this is like not New York Open, but this applies to everything, right? It doesn't have to be specifically at New York Open. This is how you should just get your charts ready and get an understanding of where we're at. And wow, would you look at that? Like you just understand, wow. So we swept this low, we're holding this fair value gap. Like it's just so algorithmic. Did I say that right? Now we're rejecting this. Maybe you could have found some shorts up here, right? Look, boom. There's a 1 minute inversion here. Go break even at this unfilled 1 minute. Because if we are bearish, we should blast through this. Do we blast through it? Boom. Take profit here. Can we get here? Boom. There you go, right? So that's how you're able to do it. Because if you did, I would switch my bias to bearish, right? After seeing, like, look at this displacement, dude. And then after seeing this rejection from not only this low and this 5-minute fair value gap, it's like, okay, the next condition is if we can break this, I will be back to bullish. But guess what? We held it, and we got a clean inversion. So that's how you can do top-down analysis. I know this is backtesting. I missed out on this. Whatever. I'm literally showing you guys. But yeah, you literally, 1 hour, 4 hour is used for draws on liquidity. what are we targeting? And now the 15 minute is like, okay, what else is in our way? What could we target? What could we go break even at? Same thing with the 5 minute. 5 minute is a pretty high time frame, because I typically execute on the 1 minute, right? Because this, how would you know to catch this on the 5 minute? You wouldn't. That's why you go on the 1 minute, right? The confirmation is, okay, we're rejecting this 5 minute. We're in a 5 minute. Oh, if we are bullish, we should have held this, right? And let's see, the highest time frame fair value gap was this 3 minute. So you would have wanted to wait for this, because I like to wait for all of them closing. I don't like to enter, jump in too early. I mean, maybe if you had more confidence, you could have entered here, but yeah, just typically not me. Either way, it still worked out, and that's just how you're able to understand market structure. Makes sense. Doesn't make sense. But that's literally all it is. Don't overcomplicate it. We're day traders. We execute on the 1 minute to 5 minute. So therefore, meaning our higher time frame is the 1 hour and 4 hour, right? That's what higher time frame means, right? The lower time frame is like the 1 minute, the 30-second, all that jibber jabber. But that's how you're able to pair up all the time frames together, right? Does that make sense? I'm gonna say it one more time. 1 hour, 4 hours used for finding your main draws on liquidity, right? Your main draws, like what is the objective for the day? Think about it like that. 15 minute and a 5 minute is like, okay, what speed bumps are up ahead? And then the 1 minute, 2 minute, 3 minute, all that is like, okay, entry, what's the biggest thing holding us back from making the move, right? That's how you're able to like predict the move and give yourself extra like confluences, like, okay, we should be going down now, right? Like, think about it. We came into this huge 5 minute. So if I am bearish and we're in this huge, this 5 minute fair value gap, if I'm bearish, I want to see us disrespecting bullish PD raise, right? And we disrespect this by inversing the 1 minute, and the same thing with the 2 minute and the 3 minute, right? Because guess what? Higher time frame holds higher power most of the times. So the highest time frame and the best fair value gap was this 3 minute. So you would want to wait for this 3 minute. Let's see, when did the 3 minute close on? The 3 minute closed at 118-ish? No, at 120, at 120. So if we go to 120, which is like right here, you would have entered here. If anything, let's see, where's the 2 minute? Either way, this 2 minute was going, okay, we're not talking about entries, but still, that's how you're able to just navigate around the markets. Sure, this wasn't the cleanest setup when it comes to like IFGs, but either way, it's still like knowing that, like, okay, 5 minute retest, and if we are bullish, then we should hold these gaps that we made on a 2 minute, 3 minute, and a 1 minute. Guess what? Completely disrespected it. Okay, because of that, I'm going to, it's all probability. Like, I've seen this so many times. It's highly probable that we go down to this low. Why? Because it's a very strong draw on liquidity. It's a 4 hour wick, a 4 hour low inside of a fair value gap, and everything else is yelling at me bearish, right? So that's how you're able to use everything together. If that makes sense, amazing. Your homework is to be able to navigate and have a good pre-market chart up routine. Like, okay, what are we targeting? And just get in the rhythm of like going from top to down, top-down analysis. That's how you're able to understand where market is going and backtest that. So that's your homework. Get a couple reps of a full week, or if you want to go above and beyond, do a bunch of weeks, right? Really just mark out levels and get an understanding of how the fair value gaps and the draws on liquidities work, and then go in between each time frame. Okay, what's holding us back? What would each thing look like, right? So if you guys have any questions, just let me know. DM me. You have me here to help, but I'm excited. Come on, let's go. Easy.